Good afternoon, this is Xavier, and today we're going to be giving our weekly technical analysis. We're just going to be looking at the charts, looking at yields, the dollar, gold, silver, oil, tech stocks. We're going to look at pretty much the entire market and just come to some conclusions that we've been seeing. All right, and like we always do, we just start off actually at the dollar. Uh, Starting with the dollar for the week, the dollar has been going up quite just a little bit. This does look like it is ready to continue on the downside. I drew a little illustration over here to the right on how when the dollar goes down, that the price of assets actually go up because assets are priced in dollars. But the dollar, I mean, it doesn't look too good. It looks nothing special. Where's the marker at? Looks like a little uptrend, and then like now we're in like a consolidation, slightly lower because lower high, could make another lower high, and this is probably going to go to the downside. If this goes to the downside, oil, not oil, I mean, oil could go up, but particularly gold and silver are really going to start to take off, all right? Gold and silver really like a lower dollar. And notice how in every single commodities bull market, so from the 1970s and as well as the early 2000s, they all had dollar go down, okay? Dollar go down, dollar go down. Uh, this was like a mean reversion because dollar fucking spiked up to unimaginable levels in the 1980s. Reaganomics. But in the early 2000s and 1970s, dollar goes down. Commodity bull market. Next thing we're going to look at is yields. Yields. Yields have been going slightly lower actually. Let's take a look at this. This is on a daily chart. Let's throw this over in the weeklies. Yields have been slightly lower. We're forming like a rising wedge pattern, okay? It's a rising wedge. I think it should break out to the upside, okay? This chart does look like it wants to break out to the upside. What do I think is the most probable outcome? I think the most probable outcome is it does something like this, okay? So it breaks this pattern, it does a false breakout, and then it teeters, and then it fucking slingshots to the upside, okay? So that's what I think is going to happen. Up, it's consolidating. It's going to go into like a false breakout and then a slingshot. Let's look up what this looks like. It looks something like this, okay, where you're squeezing into a pattern, you break out. They call it the fake out, and then you launch to the upside. It's just some technical analysis lingo you guys should get a little familiar with, okay? False breakout, slingshot. Either way, yields look kind of weak, okay? We're having a lot of these big red candlesticks. And guys, remember, yields are the interest rate on bonds. Okay, so when yields go down, that means bonds are going up, and when yields go up, that means bonds go down. All right. So if this does a false breakout, it means we could have a false flag recession. We could have a lot of recessionary fears, which price bonds higher, and then it just quickly goes away via inflation, which would be the slingshot. So that's kind of what I'm seeing in the markets, and yeah. So with bonds, with yields going down, bonds are just barely going up for the week. They're up 0.3%, but it's looking not too bad. I mean, bonds look bad, but like, look at this. Look at this bounce over here. You know, bonds look trash, but they don't look that trash. You know, and in an all chart, when you look at like from bonds from 2003, yes, since 2020, we've had like pretty much a 50% pullback. Okay, since 2020, we've had a 40% pullback in bonds. What this is probably going to do, it's probably going to go up, reach. Looks like we have a little bit of resistance over here, so we could do a head and shoulders pattern. So shoulder, heads, and then we're bringing another shoulder right here. It goes up. This is that false breakout, and then we just go right back down. I think that's a very probable outcome. Uh, and then looking at housing starts, we're still in the consolidation in housing starts where we're falling just a little bit. Not nearly like we were falling in the early 2000s or parts of the 1970s, but we are consolidating around recession areas. So Housing starts are looking quite weak. But if yields go lower, okay, if yields go lower, what I would expect is that the affordability for real estate should actually go up if the cost of money goes down. So more people will be able to afford a house, and that increase in new people being able to buy a house will cause inflation. So if housing gets cheaper, more people are going to be able to buy houses. More loans are going to be put on houses, meaning there's going to be more mortgages coming into existence, and that, as a function of the fractional reserve banking system, is going to create inflation. So this is going to fall off like it did during the early 2000s or the 1970s. And why not? Because we don't have any homes like that. We don't have as many homes as we did uh, relative to demographics compared to the 1970s and the early 2000s. Gold absolutely launching. I drew this pattern in, I think it was the last video, so last week. We broke out of this. Now I think we're gonna be in some type of like consolidation period before we go on up. So gold's looking pretty good. Silver's pretty much doing the exact same thing. Guys, look at this. These things are up 68% year to date, 41% for the year. Like, silver and gold look absolutely incredible. The 5 year looks incredible. The all time chart looks incredible. Guys, silver looks good on nearly almost all time frames, okay? We may actually have a pullback. Look at this gap. We may have a pullback because we may have like overextended uh, this breakout. We may have went up too high too fast. Okay, that's what I'm suggesting. So we could go back down to like maybe in the 40s, but in the longer term, this is gonna go a lot higher. All right, platinum, platinum looking amazing as always. Uh, just hanging around the $1,600 a month range. For the 5 year, we still broke out of this very, very long term pattern. We broke out of a pattern that's been building up since 2008. Okay, so a 15-year long pattern. We just fucking sliced through it. Whenever you break out of patterns like this, you could do a retest and then go right back on up. You do a retest, kind of like we did over here. So uh, from 1985 to 2001, we were in essentially, let's say, a 15-year pattern. We broke out, and then it did a retest, and then it took off. We're doing the same exact thing, okay? We're doing pretty much the same exact thing. Breaking a 15-year long pattern. We broke out. We could do a retest, but we're going to freaking start slinging a lot higher, all right? Oil. Oil looks so weak, if I'm being quite honest. Oil does not look good. Yeah, there's some big green candlesticks over here, but look at the wicks on this. It got bidded up and then sold off. So I think oil could go a lot lower, a lot lower. And when I mean a lot lower, it's probably going to go around the $40 to $50 a barrel range. Before this is another part of the false breakout, guys. What I'm suggesting is we probably are going to see a recession. Okay. Another thing that tells me we're going to see a recession is the U.S. 10-year yield, the U.S. 10-year yield to the U.S. 30-year yield, the yield curve. Let's take a look at this. All right. The yield curve was super inverted, and now we're breaking the yield curve to the downside. Okay, every time the yield curve goes down significantly uh, after being super inverted, there's a recession. All right, so the early 2000s, obviously the great financial crisis, COVID, right now. All of these were good time periods to be investors into gold and silver as well. So I like to say that. The yield curve does not look good. The yield curve is uninverting. When the yield curve uninverts, there's recessions in the market. So we look at the yield curve, which is uninverting. We look at housing starts that are choppy going sideways to lower, uh, and then we look at yields, which are going down, and then gold and silver are going up. So we probably are going to have a recession. Okay, that at least that's what the market's saying, and we also see that into the price of oil because oil looks like it's also about to do a false breakout slingshot pattern to the upside. It's going to break out of this pattern, probably be in the low $50 a barrel. It's going to go a lot higher. Gold to this is oil to gold ratio. Oil to gold ratio is on the same price levels it was during COVID, okay? We're just stupid cheap. We're at the same valuations we were in March 2020 when they shut down the economy. So, the US oil to gold ratio, when this goes up, that means oil outperforms gold. And when it goes down, it means gold outperforms oil. We're at all time lows. That means gold, historically speaking, has almost never been this expensive relative to oil, and that is a buying opportunity for oil. So, even at $60 a barrel, oil is priced around $10 5 years ago. So, if we were in 2020 and we were at the same ratio, oil would be priced at like $10 a barrel. $60 a barrel of oil is the new $10. Okay, so I mean, we're really early. The S&P 500, I thought it was going to go a little choppy sideways. It broke out of this trend line to the upside. So, still, I'm going to be taking a look at the S&P 500. This can't. I don't like big fat candlesticks like this, minus 2.7% days. I mean, this one day engulfs pretty much like an entire week. So, the S&P 500. It's looked like it's gaining a little bit of momentum, but still doesn't look too good. If I'm being honest, this looks like a top. Stocks doing exactly what the S&P 500 is doing. It's going up, breaking out of its all-time highs. Still think it's probably going to consolidate and then go a little bit lower. Bitcoin, Bitcoin is holding on super strong. Like look at these new highs. Oh, this is that's way too long. But higher high, higher high, higher high, higher high, all time highs. Bitcoin's absolutely just dominating, all right? And so is Ethereum. Bitcoin and Ethereum, uh, they're doing phenomenally well. The cryptocurrencies look to it seems like they're doing really well, okay? And I think the cryptos are doing really well because they sense that money printing is about to start happening in the markets. We may see some quantitative easing where money begins to get cheaper, and I believe that crypto is a function of excess liquidity in the market, meaning that crypto goes up when there's just too much money around in the world. They printed all this money, there's just too much money around, and some of it just goes into crypto. Okay. The dry bulk shippers is going slightly down. I still love this pattern. Whenever this breaks out, this is going to do a freaking launch. Okay. One of my favorite ratios is the dry bulk shippers to gold. Because then you see that dry bulk shippers are priced at all time lows to gold, which is really good. A dry bulk shipping stock that I would look at, I'll give you guys one. SBOK. It's called Starbucks Carriers. All right. It had a nice little double bottom. It broke out of the neckline of the double bottom. It's doing consolidation. This thing's gonna go up. Okay, this thing is going to launch. It's going to launch, and you got to be prepared. During the 2008 valuations, it was around $400 a share. Right now, it's at 17. I have the chart on logarithmic. Take it off of logarithmic. Look how it looks. Okay, guys, this is it's gonna start getting spooky. The dry bulk shakers, the dry, I said the dry bulk shitters. The dry bulk shippers are looking really well. Okay, and then once again, M2 money stock and the Fed's balance sheet did increase for this month. So what I'm seeing in the markets for this week is the recession fears are actually increasing, albeit gold and silver breaking all-time highs. The yield curve is uninverting. The stock market seems to be melting up to the upside. That's a very unusual move. But it's a usual move before a recession. Oil looks ridiculously weak, and housing starts are still in that consolidation to the downside. It's not falling off of a cliff, but it's consolidating to the downside. I think we may have a little bit of a short recession. It's going to be a short-lived recession because if yields get too low, I think a lot of energy is going to be put into the housing market and especially mortgages. There's going to be new mortgages in the system, and that's going to increase inflation, and that inflation is going to make interest rates chase to the upside. So that's a little bit what I'm seeing in the markets this week. If you have any questions or comments, just leave it below. Make sure you like, comment, subscribe, and I'll see you guys later.